Hey, crypto enthusiasts! The fog around cryptocurrency accounting has finally lifted. The Financial Accounting Standards Board, FASB, dropped ASQ 2023 August, the very first official rulebook for accounting crypto under GAAP. This is huge, folks. This updated set of rules actually a game changer for how we treat crypto assets in the world. Whether you're crypto asset fans, shareholders of listed companies like Microstrategy or Tesla, or running a Web3 startups, these changes could have a big impact on your investment and make you earn more through more disclosure data. So let's break it down, and don't worry, I'm not going to bore you with pages of dry jargon. The crypto world moving forward. In short, the new rules mean cryptocurrency has to be measured at its current market value and get this reported directly in net income. No more guessing games. This is a major shift in how crypto is accounted for in financial statements. Why understanding the updates is important. As the world of crypto continues to grow, more and more publicly listed companies are jumping on the crypto bandwagon, whether they're holding it as an investment or accepting it as payment. Big names like Coinbase and Marathon even building their entire business models around crypto. And with the SEC recent approval of Bitcoin ETFs, this shift is gaining serious momentum. I personally believe not only these big giants, but also increasing startups will be hugging crypto assets and blockchain technology. This is the beginning of 2025. Let's look back at the end of this year. Who will be affected by this update? There is only one sentence in this official codification, but I will present my personal thinking later. In this series of videos, I've set current GAAP rules and updated rules to represent the old and new ones in order to make it clear. And that's the same as how official codification called them. Some companies will list crypto assets and intangible, goodwill, and other. Let's take Microstrategy for example. This is Form 10-K for the fiscal year ended December 31st, 2023. I scroll down to balance sheets and we can see Microstrategy listed Bitcoin as indefinite-lived intangible assets. They purchase and plan to sell it at higher price. It's an investment. How to understand intangible assets? These assets are seen as something with no clear end date, like an asset you can keep on holding forever, that don't have a set lifespan. And they're intangible. You can't touch or physically see them, like crypto coins. Now we look at their balance sheet. We'll see Bitcoin listed separately from other intangible assets in the long-term section. That's because Bitcoin's value is way higher than most of the other intangibles they own. Plus, it's not just another asset. It's actually their main business and income source. Unlike other intangibles, Bitcoin's value can be super volatile, and it can be easily liquidated, so it's treated a bit differently. Alright, when it comes to Bitcoin purchases and sales, the cash inflows and outflows are shown under investing activities on the cash flow statement. Why? Because Bitcoin is treated like an intangible asset, kind of like a long-term investment. So whenever MicroStrategy buys or sells Bitcoin, it's recorded as part of their investments, not as regular operations. It's like treating Bitcoin as fancy stock, not day-to-day business expense. But that also means Bitcoin can be listed as operating activities when applied. We'll talk about it later. Under the current cost-less-impairment accounting model, companies only need to write down the value of a crypto asset if it drops. But if Bitcoin goes up in value, too bad, they can't record that increase until they actually sell it. So the accounting system shows you the losses, but not the gains until cash out. Now you understand why shareholders disclaim the current rules and urgently need a new one. What are the updated crypto accounting rules? Well, the Financial Accounting Standards Board has laid out a new clear guidance for crypto assets. This is the very first official rulebook giving companies a specific framework for accounting for crypto assets under US GAAP. It's like FASB made a special rulebook just for crypto. I believe after this, FRS and other countries will gradually study and publish their official GAAP book. It adds a brand new section just for crypto, and there is also a transition paragraph that tells companies how to switch to the new rules when they come into effect. Now these rules don't kick in until fiscal year starting after December 15, 2024, but companies can actually adopt them earlier if they want to. When they do, they'll need to adjust their opening retained earnings to account for the difference between old and new ways of handling crypto assets. What differs and main improvements? The current one, if a crypto asset's value drops, the company has to write down and show the loss. But if the value rises later, they can't adjust it back up on the books. The updated one, still intangible assets, but measure crypto assets at fair value. What is fair value measurement? At the time of acquisition, crypto assets should be recognized on balance sheets at their cost, which includes the purchase price and any direct costs incurred to acquire the asset, for example, transaction fees. Companies must now value their crypto assets based on their current market price at the end of each reporting period, for example, monthly, quarterly. Many companies issue financial reports quarterly. For example, if you own shares in Microstrategy, you get an update on their earnings or losses every 3 months. But here's where it gets interesting. The volatility of Bitcoin or any crypto assets they hold will directly impact their financial results. For example, last year we saw Bitcoin go from 30K to 100K. And if you're a shareholder in Microstrategy, you probably see those gains reflected in their reports. But remember, this works both ways. If Bitcoin's price drops, the same volatility can hit investors right in the wallet. About deal recognition and amortization. When crypto assets are considered intangible assets with indefinite lives, they should not be amortized. Gains and losses will be recognized in both annual and interim reports. We will not call it amortization. This is in line with the general treatment of intangible assets. But assets with a finite life will be recognized as amortization expense. Presentation and disclosure. Crypto assets are shown as a separate line item on the balance sheet and income statement. They shouldn't be included in the same category as other financial assets like cash or receivables. Disclosure requirements. FASB requires detailed disclosures to provide transparency about crypto assets held by the entity, including the nature of the asset, cost basis, fair value, period of holding, and etc. The method for determining the cost basis of crypto assets should also be disclosed. In the next video, we'll talk about who will be affected.